The big debate this evening is the banking bill going to be a huge game changer for the industry? Will it set the stage for consolidation in India's banking sector? And to answer those questions, we're joined live by Nanalal Kidwai of HSBC India, also president at FICCI, and Arvind Virmani, former chief economic advisor and also formerly with the World Bank. Thank you so much, both of you, for joining us on Business Night. Nana, if I can begin with you, what's your sense? How will the new banking bill really change the contours of the banking space?
Well, the new banking bill has brought in a number of changes which we have been awaiting for some time. One is to do with proportionate voting with shareholding. The other significant one is it sets the contours of how M&A will work between the CCI, the new Competition Commission of India, and the Reserve Bank of India. Essentially enabling the Reserve Bank of India to be the last word in this, but being guided by the CCI. And most significantly, there's the much awaited frameworks which this bill brings, which is to enable the Reserve Bank of India to move ahead on new bank branch licensing, or new licensing, as in new banks being permitted to come into the country. And how this actually evolves is going to depend on the Reserve Bank of India, because the RBI has to set the contours, and it is for the RBI to define what is fit and proper and who would be eligible, therefore, to actually apply for these licenses. I think what I would like to see is some of the NBFCs that have operated as NBFCs, non-banking finance companies, and are keen to go in to a full-fledged banking license, be enabled to do that, because this enables the regulation, which is much tighter for banks than it is for NBFCs, to embrace these institutions.
Fair point. I'm going to get to that point in just a bit, Nana, but I also want your quick reactions to, to the fact that now we have proportionate voting rights. Is this a big game changer for banks like yours?
It's not a game changer, but it helps. And the shareholder community certainly likes to see this, that there should be proportionate voting rights along with shareholdings. And to that extent, it's not a major reform, but it's a good reform.
Dr. Virmani, let's get this debate to you. How crucial do you think is it really for India to get a new banking bill, which it now has, and new banks across the country? Do you think this legislation is really a game changer, the term that we are using very frequently on this debate?
Key issue is new ideas, new competition, generally, and of course well regulated. In the case of the financial sector, as we know from the global financial crisis, it is critical. It is not like the goods and services sector where just having more competition will work by itself. In the financial sector, you have to be very careful. It has to be well regulated. Otherwise, you build problems for the future. But well regulated competition is always good, even in the financial sector. And to that extent, it will be a positive.
Ms. Kidwai, let me just bring this discussion back to you. The assumption is that this legislation will actually pave the way for hectic M&A activity to take off and also pave the way for consolidation. Do you expect that to happen?
I don't think hectic M&A activity happens because of the framework that is established. It certainly enables M&A activity. Whatever M&A activity happened primarily in the private sector bank space, and it happened with the blessing of RBI anyway, and it is RBI's blessing that would be required even today. So no, but on the other hand, I do believe we need some consolidation in the banking sector in the country, and the fact that the frameworks are now clear, established, the role of CCI, the role of RBI, and how the two will interact and interface has been established, and that is important.
All right. So how soon do you expect RBI to come up with guidelines for new bank licenses? Because that's something the industry is going to be watching out very closely.
Well, I think this will take at least another year to 18 months, because RBI now will go into a mode where they will share their views as they tend to do through a paper, which then gets discussed and debated. Inputs received, and then it emerges as a guideline. So I have no doubt that RBI has already been considering a lot of this in terms of internal deliberations, because this has been on the cards for a while. But they will take their time to make sure that the guidelines as they get issued are indeed as they are comfortable, and also after receiving inputs from the various constituents and indeed the Ministry of Finance.
All right, one last question, and that one is to you, Dr. Virmani. Was the government right in dropping the controversial forward contract clause, given everything was really stuck around this? Does this in a sense also show the maturity of the ruling alliance?
My view would be that it's not that important to get everything through. I mean, if that is true, if there's one element of it relating to forward trading, then in my view, it's better just to drop it and get the bill passed. You know, compromise is the way the system works, I mean, the parliamentary system. And I don't think that one clause is so critical, but it's more important to have these bills which have been pending for considerable time to be passed with any reasonable compromise.